market performance. We did finish in positive territory, which was good to see after yesterday's losses. Still not managing to crack that 5,000 mark in the end, though. What did you make of the session overall?
Yeah, well, it was a nice little bounce back on the market today. We ended up about 0.5% higher. So just a small bounce back from the 3% loss we saw last week, and it really was helped higher by the big four banks. Big four banks put on about 12 points on the market today. Industrials and consumer discretionary again performing pretty well. In fact, it was the typical type defensive sectors which were the lags on the market today. Utilities, telecom and property were the sectors which ended in lower territory today. And we did get that positive news coming out of Europe today that Cyprus looks like it's going to avoid default and stay in the euro for the time being. I think we didn't see a huge reaction on the market because last week when we did see the market fall about 3%, I don't think this Cyprus deal was the only contributing factor to the weakness in the market last week. We saw disappointing data coming out of Europe. Locally here in Australia, we saw some broker downgrades on our banks and also on some negative iron ore reports, etc. So that all added into a bit of market weakness last night. So I think we would expect that the US and European markets would bounce back tonight as well. Futures for those markets at the moment indicating that they will open higher. I think what's interesting, maybe we have missed out on the opportunity for a bit of a small scale case study on the Eurozone here, because if Cyprus was to have left the euro, really historically we haven't seen anything like this before. So I think that's why sort of views in the market are so divided. You've got some people saying that, you know, these countries are going to suffer under years of austerity measures under the bailout plans, and they should in fact just take the hit straight up and leave the euro and bounce back quicker. So the views in the market are quite divided over whether these countries should go under these austerity measures. So possibly missing out on a bit of an example that could have been made out of Cyprus here. But I think the bailout here certainly isn't going to resolve the problems facing the likes of Cyprus and the peripheral nations. They're still contracting at quite a rapid pace in terms of their GDP. So as I said, we'll look for the probably global markets to see a bit of a bounce tonight as well.
Much of a pullback as we're likely to see in the ASX 200 now that we've got this deal on the table. Are we going to sort of see the end to volatility, at least for the moment?
I think it's a bit hard to tell. As I said, we've fell back about 3.5%, which wasn't very far. And I think if we were going to see a correction in the market, which many people were calling for, I think the trigger was going to come probably way out of left field, which it did, coming out of this tiny nation in Cyprus. So that's what Cyprus really was for the market. I think it was more of a trigger rather than an actual reason for the market to sell off. So if the news flow does turn positive, it could well be the trigger for the rally to continue. I mean, if we look back over the past 9 months or so since this great rally started in June 2012, the biggest correction we've seen has only been 5%. Every time the market's pulled back, it's been supported well, particularly in the big stocks. So you look at the ASX 20, they've always rebounded strongly, particularly within the banks. The materials really the only exception to that, which have continued to outperform. But the yield story continues to be in play at the moment, it appears. Over the past month or so, where the market sort of tracked sideways or even lower, all those days where the market's sold off, we've seen a rebound over the next few days. Sort of last week was the only exception to that. So I think it's a bit hard to say whether this correction's finished yet. Certainly the market ran up so quickly that we may well just be in a bit of a period of consolidation for the next couple of months, not necessarily moving in one direction or the other.
All right, Tim Piper from Bell Direct. We'll have to leave it there, but thanks so much.